We had a nice turnaround on the JSE because we had quite a poor start this morning. We were down by about 0.5% mid-morning, started retracing this afternoon and closing 0.8% higher, so a bit of a volatile day.
Yes, I mean, this morning we followed suit from the eastern markets and we were actually started the day negative. We weren't as negative as what I thought we would be, and like you said, we staged a very strong turnaround, a little bit of volatility in the market, but nice to see the market finish up on its highs at the close this evening.
And of course, we did have the futures close out yesterday, so big volumes going through the market yesterday. Volumes now expected to really peter out as we head towards Christmas.
I think yesterday was quite key. Leading up to yesterday, a lot of people were just waiting for that closeout as an exit mechanism before Christmas to start taking their money off the table and look at re-entering the market as the new year starts. So yeah, I 100% agree. I think volumes are definitely going to taper off as we move into next week and toward Christmas next week Friday.
Now taking a look at the US market, last night we had some disappointing jobs numbers, and also last week slightly disappointing on the new claims coming through in the market. We saw a bit of a pullback on the Dow last night. We also had news coming out of Greece that had been downgraded by a second credit ratings agency. So a bit of more volatility coming into the markets and a bit more risk aversion. We've seen that dollar quite strong.
I think of late the dollar's been quite a key indicator for a lot of traders and investors out there at the moment. And we are seeing somewhat of a counter trend movement in the dollar where you are seeing it strengthen, and that's obviously due to a bit of risk aversion and also due to previously about a couple of weeks ago we had some better than expected GDP data coming out, and at the moment it's difficult to try and say where the market's going. The market is a little bit top heavy at the moment. As you mentioned, the volumes are thin, but commodity prices seem to be coming off but holding strong levels. So maybe what you're seeing is a little bit of a counter trend movement in your commodities, but domestically our resource stocks are holding their own ground. So you know, there might be a bit of correlation movement out from market strength and dollar weakness.
Are we starting to see some of that dollar carry trade unwind and money flow back into the US equity market, do you think, Deryck?
I think there definitely is. There's definitely a bit of appetite to move back into the dollar, given the fact that the US could be recovering at rates better than expected. And people have got appetite for US equities as we move into next year. But it's still a very choppy situation. And I think a lot of guys and a lot of investors out there would agree that there's a degree of uncertainty out there. So it's very volatile. And as quickly as the movement moves into the dollar, it can just as quickly move out. So yeah, it's a choppy situation.
And of course, as the volumes start to peter out, then the volatility has the potential to become even greater, doesn't it?
100% agree. So you are going to see a little bit of uncertainty and movements either side, and those movements, intraday movements, could be due to that lack of volatility. So look, I think we've seen some strong gains in March, and a lot of guys might be of the mentality saying, look, let me take my chips off the table, let's re-enter the market, evaluate the situation next year, and go and enjoy Christmas and relax.
Of course, as we were talking about how futures close out yesterday, today we have the quadruple witching in the United States, which is essentially the closeout on their futures markets across currencies, equities, etc. I mean, would you expect the same degree of volume going through the US markets and also the same degree of volatility perhaps today?
I think so. I think the volumes are going to pick up, but as we move, like I said yesterday for our closeout and today, as you said, globally, I think this is a nice sort of exit strategy. People want to just take their money off their table. You've seen the markets have been quite resilient actually, and like you say, you saw the European markets turning around, moving positive at the moment. So, you know, I think once this is all under the belt and Christmas has moved past and we move into next year, there's going to be a bit of appetite coming into this market. And, I think there's going to be a bit of emphasis on stock selection as we start the new year.
Well, I mean, as you go into 2010, what would you be looking for in that market to actually gain that appetite? I mean, is it going to be earnings surprises on the upside again, as we saw this year? Are we going to be looking at economic data? What's actually going to drive that appetite?
It's a very difficult debate, and I must be honest, one needs to remember that the earnings surprises that we've seen of late have been surprises that have worked off a very low base. And we are starting to gain traction in our economy, global economy, and interest rates are working off a very low base at the moment. And it is going to be difficult. There is going to be, like I said, some strong emphasis on stock selection. I think as we move into the new year, you are going to see earnings probably surprise. The question is are they going to surprise to the extent that we've seen this year, and is it going to be in line with expectations? At the moment, I sit on the fence, unsure and uneasy. I think we need to just start the new year get a couple of earnings under our belt, and then take it from there.